Hi, everyone, and welcome to this week's segment of Mish's Market Minute. I am Mish Schneider, and once again, I like to always thank StockCharts TV for hosting me on these shows. So as I will be on vacation until the week of May 3rd, there will be some evergreen videos to see in my absence. I thought today I would really do a thorough deep dive into all commodities. And there's a whole bunch of reasons why. The first reason is that a lot of people are talking about the transitory inflation trade, the reflation trade. Some people are even calling for a depression or a recession. To me, what I'm seeing more than anything right here is the possibility of the stagflation. And of course, that's a situation where the economy begins to stagnate while commodities prices continue to increase, which is a very, very difficult scenario for consumers, especially if the dollar goes lower. For the Fed, because in order for them to really control it, that means often putting a kibosh on the actual market and raising rates. And certainly just for the market in general, because what that would do is that would really probably create a lot of selling in the overall equity market. So what evidence do I have on this? One is the consumer price index and the producer price index, both which surprise coming in higher. The Fed right now, actually yields are going down. Mortgage rates are actually back down to about 3%, and the TLTs are trading back up over 140.91, which means they're flirting right now with a 50-day moving average. Cryptocurrency being launched is good for tech. It also not only has been used as a hedge for inflation, but also could be signaling that we're going into inflationary times as many of the coins start to become richer and richer. Post-pandemic, we've had issues with supply chain disruption, slower production, and low labor force, creating a lot of commodity rising. And then in terms of a lot of the soft and the food commodities, there are still environmental concerns. We're sort of getting through the drought season in Argentina and in Brazil, but we have the United States, which is a huge growing area, coming up into its late spring and summer. And I know in New Mexico, for example, we're already in drought conditions. And then in terms of the stagflation part right here, you have to really look at the gross domestic product, and these projections of 4 to 6.5% growth could be very well related to coming back after a pandemic. But the question is, with not one Republican right now in favor of the infrastructure plan, from what I read, what real growth can we count on once we actually do come back from the pandemic? So I'm going to try to be pretty thorough here and maybe a little bit faster so I get to everything, but here's all the symbols once again that I'm planning to cover so that you can refer back. So let's go right from the top here to gold. I've been pretty bold about gold, saying that even when it was going down here, I wasn't fully convinced that gold was going to actually collapse. It just doesn't make any sense. Really, what is there left to buy in this market to protect you against inflation? Gold was the last thing and the last man standing, so to speak. So what we're seeing here right now is two really nice things. Number one is we're seeing the momentum get back over the 50. It has not been back over the 50 since here in the early part of 2021, just when we started the year. So that's a pretty good reversal there. And then as far as the price, we're heading back over the 50 as well with a strong move as I'm talking to you. And that means we're going to look for a second day, might even see at the end of a week some level of consolidation, an inside day, whatever. But if it confirms that 50-day moving average or the recuperation phase and over on the real motion indicator, then I would think that we might be able to see gold at least pick up some momentum here to about 170. And if we move on to the others, what's interesting is that people are asking me about silver, and certainly in true inflationary times, you have a silver to gold ratio that usually is in favor of the silver market. However, if you look at the pure price and the momentum, this didn't collapse the way gold did, but it's certainly not over the 50-day moving average. In fact, it kind of head right to it. And the momentum is coming back, but it's still not great. So I would keep an eye here on silver. I'm not saying it's not great, but I would like to see, first of all, maybe another test of around 23.50. If not, I'd like to see it get through 25. If it gets through 25, then this, I think, would look like a really strong base. However, on the flip side, GDX is doing well. in fact, is doing better than gold. And that makes sense because generally the miners lead. So in this point, this was already starting to show a positive divergence or momentum here when it was clearing the 50 right before this actually did clear the 50. So this was really the best buy opportunity right here. But if this is really getting going, which by the way, you can see now that it's actually exceeding in terms of leadership against the SPY or the benchmark, then this is just getting going. So you've got a good new area to look at around 35 to hold. You get any kind of consolidation, you can buy a little bit of a position and actually even increase your position if this starts to get through the 200-day moving average, particularly if the momentum can clear over this black line, which is the 0 line. So that's something to keep an eye on as well. Now, if we move over to copper, we're going to use FCX to look at. And FCX also had a nice breakout after testing the 50-day moving average. The momentum, though, is still not great. Gold is really, and GDX are having the better momentum here, but that kind of makes sense because copper has been way stronger than gold. So we could be just seeing a shift in the momentum waning, not necessarily negative, while the price starts to play some catch up. And you can see with a high here lately of 39, if you can get through that 39 level, then that would look pretty good as well. And of course, if we get any kind of correction down to 35, then you can use the 50-day moving average as key. But I would keep my eye here on the momentum. And then if we use steel through the symbol X that was doing well, it's actually come off a little bit. And so has the momentum. You can see the momentum and the high price kind of match. Although even here, the momentum wasn't nearly as high as the momentum was here when the price was a bit lower. These are the kind of things I like to watch for because what it tells you is it's not a good time to chase new highs. Why I'm showing you that when things are coming back from being beaten up momentum and you start to get some kind of a price movement to the upside, that's when I like to chase a little bit. Otherwise, I'm hesitant to do that. And now in this case, with it being under the 50-day in the real motion indicator, yet over the 50-day, but coming off, that tells me that maybe steel is coming down a little bit. And like I said, gold is going to be the new instrument to shine in terms of the metals. Now, we also want to take a look at copper here. In terms of the pure return, this is ETN JJC. And essentially, this too had a low momentum, never failed the 50 here, but did fail the 50 here. And you can see now that this is actually approaching the 50 while this is flying. So now, again, this would not be the kind of thing that I would necessarily chase. It's just different information than what we saw with FCX. But right now, again, high made, with the price being here, and now here we have momentum much more negative with the price being here. So what does that say is that once again, you don't want to necessarily be a chaser, but if it does improve in momentum, you could at least get in for a much shorter time frame if you're interested in buying copper. Now, moving on with the metals here, let's look at palladium. Now, some of these ETFs are very hard to trade. You see, they trade in dots because they don't have any volume, but it's good information. And actually, as gold is going up, this high of 257.91, today's high is 256.77. We're very, very close to actually making a new high here. And the momentum is actually doing okay. So what this is telling you is that physical palladium is also in high demand and another commodity that supports my potential stagflation theory. By the way, companies that rely on these commodities for their products will often not do well in these type of stagflationary times for different reasons than the market. Nothing to do with interest rates, but the cost of goods rise. They have to pass that cost to consumers, which means that consumers pull back. In all ways, it's not a great scenario. Now, if we go here to platinum, platinum has really been actually sort of interesting as well. Momentum down, has been down since back here when it peaked. And actually, in this case, there was no divergence. Now, as we're coming back to the 50-day moving average, we're improving in momentum, but certainly not by enough yet. I'd like to at least see it clear the Bollinger Band here and give us a confirmation that this is truly in a bullish phase. Then at least if you want to get involved with platinum based on the confirmation of the bullish phase or two closes over the 50, you have a relatively decent risk to underneath all these lows here, this low being right here, 107.15. So I'm saying to about 107. And doing about a $5, $6 risk in something like this is not bad, because you can see that even if it just went right to the high, there's a 2-to-1. You would have a $10 move to the upside. So if you're so inclined, this also could be an interesting play. Now, of course, everybody has talked about the price of wood has just gone parabolic. Also interesting is that this goes parabolic. And by the way, a breakaway gap. Breakaway gap means a gap to new highs. You don't want to see that gap get filled. That low right here is 91.37. That gives you a good point to look at. The momentum, though, has not been great. That tells me two things. This will fail the gap. It could be topping out potentially after all of this move up, or it could just be getting ready to get going as the momentum is improving with the breakaway gap, in which case we could see much higher prices. All of this is so interesting to me. Now, the next one I wanted to show you was more with agribusiness, and it's called MU. Now, this actually also making a new high while the momentum is waning. So this would not be one I would chase, but nonetheless, this could be an interesting situation if we consolidate here on the momentum, don't go much lower, holding that Bollinger Band, while this maybe consolidates in the price again, maybe drops it back down into the mid 80s, in which case then, well, maybe even a little higher, say 87 to 88. And if the momentum stays good, that could also be an interesting situation. But more importantly is everything so far I'm showing you is supporting how commodities are indicating inflation. Here's corn. Now, I know I've shown you corn before, and corn also now is starting to gain in momentum as the price is starting to gain. Corn is just amazing how it consolidated for all this time, and then boom, once it started taking off, it gave a new opportunity to get into it after it sold off here initially. So corn, though, more importantly, we're not even in the summer season yet in the United States, big corn growing. So I would say 18 would probably be my point to be looking at with corn to hold. Soybeans, another one. Now, soybeans is actually consolidating. So this would really be, I think, probably the better opportunity. If this can get back through 21, say 65, you've got a risk down to the 50 at 21. And what that tells me right now is, even though we're not looking at great momentum here, in terms of our momentum indicator down here, if we can clear the Bollinger Band and 2165, I would still take the trade. Obviously, by the time it clears the momentum, this could be up at 2250. So for me, it would more be that we had a low here, higher low here, and now we get back that Bollinger Band as this takes out 2165 with an actually really decent risk. And then to complete the grains, in terms of the individual grains, we've got wheat. Now, wheat had this one collapse here, and now look at the momentum. It's finally starting to catch up here over the 50-day, as this has now had two closes over the 50-day. So this would be another opportunity to be getting in actually kind of right now, if you were so inclined, because wheat, you could use very easily a simple stop. I would probably say under this low right here, which is 608, buying it somewhere between 630 and 630, whatever the high is of today, 639, anticipating that if it takes out 650, this momentum could get going, and so can wheat. Now, if we go on to DBA, which is the sort of combination of all of these, this still hasn't gotten through the Bollinger Band, excuse me, the 50-day moving average on the real motion. But you can see here that we're approaching these highs, these recent highs of 1761. So this is another one. It was a good buy at around 1710. Now it's getting a little rich. We want to see the momentum catch up. So I keep an eye on this. Actually, I really kind of like the wheat and the soybeans even more here than what I'm looking at the overall DBA. Next is sugar. I've never gotten out of our sugar position. And right now, this is finally clearing the momentum indicator here over the 50, even though the price has gone well above the 50. I think this thing can go up over 8, somewhere between 8 and 850. I like the fact that you have a good tight risk to under 728, say, which is just under the 50-day moving average. And with momentum now in its favor and showing some leadership, Cane 2, which, by the way, is tied to oil, is another interesting play, which brings me to coffee. Now, coffee has been choppy, really difficult to trade. If you buy it on the strength, you get stopped out. If you sell it on the weakness, you get stopped out. It's almost like you have to buy the weakness and sell the strength. But right now, we're smack dab in the middle, also getting over the 50-day moving average in momentum. That's a good thing, as we've just climbed over $1 over the 50 here, which tells me the opportunity is still there if you want to take a tight risk to, let's say, under 37 from here, anticipating that if this momentum improves and this gets into a movement over 40, that this time maybe instead of it being a great sell up there, it actually continues. And if you look at it over the course of, say, since a year ago in the summer, you've got this huge base forming here. Next time this clears 40, this thing can really just power out. So that's another one to be keeping an eye on. Okay, now that takes me to oil. Here's USO. Now there's some geopolitical stuff going on. So that's another factor here. And with the geopolitical stuff, mainly Russia being the main one right now, that's giving a boost to oil. But again, momentum hasn't quite cleared this 50-day moving average as this is starting to get go, which means either this is a false breakout here and will start to turn lower, or if we start to see this clear the 50-day moving average and momentum, this could mean that this has got another trip up. With oil guiding up to about $65 to $67 a barrel, I still think that this can go to $75 a barrel, which would probably put this closer to 50. And now let's take a look at coal. I haven't looked at this one in a while. Tech was one of our great trades last year. We got out and never got back in, but it's the same type of situation. It's under the 50 in the momentum today, confirming the move over the 50 in price. So once again, this could be a situation where it's a false breakout and will start to fail, or we start to see the momentum pick up, in which case this takes out these current levels here, let's say over 23, and also continues to rocket up to much higher prices. Uranium has to hold, obviously, this 50-day moving average. Momentum is not great, but it's sitting right here on the dotted line or the Bollinger Band. Now, of course, there's also Iran talking about increasing its uranium production. And this has been sort of also kind of a choppy one to trade. You had that one big move here, but it's been sort of choppy since, with a high here. And then at that point, the momentum actually starting to wane. So I would give this a little more time, see if we can start to head towards the 50-day moving average in momentum, and at the same time, see if we can hold the 50-day moving average. And then perhaps another move through 20 would be a good situation to be looking at, with a risk down to the 50-day moving average as the next play up in uranium. Okay, a couple more left here. Let's also go to natural gas. Natural gas is another one that is actually improving here in momentum, heading towards the 50. No divergence because it's not above the 50-day moving average yet. So I would say this could be a really simple trade, in that if it confirms the price over the 50 and the real motion over the 50, now you have a match, in which case I would not hesitate to buy natural gas. It's been awfully cheap, looking to see what happens from there with a relatively good risk. And another way to look at it is actually UGA. It's not natural gas, it's gasoline. But again, Is this a false breakout with the momentum heading to resistance? Or is this too just getting going if the momentum can clear the 50-day moving average? Obviously, you have a really good risk here also to the 50-day moving average, and probably would want to see this continue and hold back over around 33. Lithium is another one. Right now could be a unique opportunity there. Electric cars and solar energy have all actually sold off in the market as the money has rotated more into the mega cap stocks and some other areas. So this could be also sleeping now that it's got to move back over, at least in the momentum, the Bollinger Bands, and it's pressing up against the 50. I would say very simply, wait for 2 closes over the 50-day moving average, and then you can risk to under 60 with that one. FO, which is water, is another one making new highs. I've shown you this one in the past. Really like this consolidation at the highs here as the momentum is also sitting here. I think we can see an explosion here. Water is still a very valuable resource. And so at this point now, I'd probably just wait for these highs to be taken out more convincingly or over 51.25. And then I would actually maybe risk to under 50 and wait for that momentum to play some catch up. Last two, this is cotton. Even cotton has been performing well and then came all the way off. Also under the 50-day moving average on momentum and price, just clearing back over the 200 here, 2 closes back over the 50. I think you could see a move in cotton as well. Certainly that is affected by any kind of drought situation in the summer. And the last one is cocoa. And with cocoa, you had really weak momentum as this was selling off. You had kind of a double top here. But now that it's clearing back over this 200-day moving average or over 30, I'd keep an eye on this momentum. It's back over the Bollinger Band. If it starts to move up a little bit more, you might have an opportunity to get in ahead of the 50, or again, wait for 2 closes over the 50-day moving average and see what cocoa can do. So that is a full-on look at all the different commodities with lots of actionable information. I hope that gives you enough to keep you busy while I am taking the break. And I wish you all a very peaceful next couple of weeks. Thank you so much for watching. I'll see you all first week of May, and bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.